Welcome to Prosperous Real Estate Investors Network. In this brief 10-minute presentation, I would cover with you frequently asked questions in regards to our real estate investment strategies for the clients to better understand what it all involves and how to enter and exit. So the first question that is frequently asked is, where are the properties located? Folks, the properties are located nationwide. It is very important that investors understand we are not limited to one area. Our inventory is located nationwide. We are focused in the areas where the numbers work. What are the numbers? We look at few aspects. We look at the ratio between the market value, the present market value of the property, and the rental income. And what we are looking for is 1% rent of the present market value or higher. If the market value is $100,000, given that you acquired the properties through our network for $50,000 or $60,000, regardless of that, if the present market value is $100,000, we are looking for a market rent which is $1,000 or more. And that is a market rent. That is not a made-up rent. That is one ratio. We also look at the income of people and the purchase price of the properties and also the market value. There are a few different things that we look at, but we are very much focused only on the areas where the numbers work. There are also different areas for different strategies. Now, what do we mean by different strategies? There are two different strategies that investors are interested in today. One, buy and hold. Second, buy and flip. Depending upon your strategy, if you're focused on buy and hold, we may have you focus on a certain area based on the dynamics of that area. But if your strategy is buy and flip, definitely your focus will be in the area where we believe that we can help you, assist you, exiting and profiting. It is also important to understand that we add and delete markets based on needs. Sometimes the markets are too saturated. Sometimes the markets are too hyped up. Sometimes we believe that there are no good deals left in the area and we move on. So we continuously add and delete markets. But the bottom line is we are focused in the markets where the numbers work. Now, for the investors who are looking to purchase multiple properties, the question is, what if I want to own multiple properties? How would the financing work and how would the exit strategy work? Now, it is a very simple process to get the loan for what we call a package deal. These are multiple properties that you can acquire at one time. In fact, this loan program is 100% non-recourse. It does not require you to show your tax returns. It requires you to have some cash reserves, and we can discuss that cash reserve guidelines with you in person. But the credit score requirement for this loan is 640. 640, it's given for 12-month period. It's 100% non-recourse. It does not require you to turn into your bank statement, not bank statements, your tax returns. It does require you to show some reserves to the lender, and it does not require you to have a full-time job. You could even get away with stated income. The exit strategy for the package loans could be a refi into a conventional mortgage or flipping. And now we have covered that in a previous presentation on our website, how to buy and flip. Again, to get more details about how the flip program works, please contact us. But the exit strategy could be either. You could either refinance or you could flip the property. There are also contingency plans in place, just like the last loan program. There are always contingency plans. The last thing we again need is investor turning the properties back to the lender. These are 100% non-recourse loan that in an event that you cannot refinance or exit, the only thing the lender can do is take the property back. It will never show up on your credit report, and it will never be reported as a bad loan on your credit report. Now, this question is very frequently asked, that do the properties have to be purchased through our network? And the answer to that question is yes. The properties have to be purchased through our network. And investors ask us this question, why is that so? So reason number one, that is the only way for us to stay profitable and stay in business. Reason number two is that's how our wholesale investors who are part of our network get paid. Remember, we are a real estate investor network. We are a network of buyers and sellers and lenders and other vendors. So that is why we must have the properties purchased through our network. But the third and the most important reason is that this is the only way for us to have the control over the transaction. In case things go wrong, if we have a control over a transaction, we can control the effects. We are also sometimes asked, what if you found a property on your own that it's either in your area or in the area where we are bringing you properties from? What if you brought the properties? Can you finance? And the answer is still no. The properties have to be part of our network. We are also offered, how about I pay you? All we want you to do is get us the financing, and I, investor, will pay you X amount of dollars for getting me the loan. And the answer is thanks, but no thanks. Again, because of the quality control reasons and to stay profitable, we must have the property sold through our network. Folks, we are not lenders. We are real estate investment network. The only way we get paid is by introducing properties through our network from our wholesale investors to our buyer investors. The due diligence process is very detailed. Typically, we would have investor take between 5 to 10 business days, sometimes even up to 15 business days to conduct full due diligence. The first part of due diligence includes area and location. We teach you, there's a special webinar we conduct with our pre-approved investors one-on-one, where we walk you through the whole process of the due diligence. But in a nutshell, you will approve area and location. You will verify and approve cash flow numbers. You will go over the rehab bids and you will analyze them and approve them. And more than you, the underwriter who's given you a loan, approving your loan, is going to approve the property and financials. Everything has to happen. All the stars have to align before the due diligence period ends and before the property is approved. Now, what happens if you or the lender do not approve a property? That is a very good question, and we will answer that question. Now, you have to understand that the contracts are written in such a way that your earnest money is refundable during, if there's a 15-day due diligence period, for 15 days due diligence within that time period. If for whatever reason you or the lender decide that the property will not work, your earnest money, which is typically $500 or less, will be refundable. But you have to give a written notification, which we will assist you in formatting and delivering to the seller, letting the seller know that this property will not work for you or the lender. That is how you cancel the contract. After the due diligence is over, the contract is canceled. Our real estate investment advisor and yourselves will have a post-diligence consultation where we'll try to learn what were the reasons, because there have been different layers of diligence done on this property before it was brought to you. So if there's something that we are missing, we will find out what is that, and we will learn if your needs have changed. And then we'll go back locating the next prospective property for you. Thank you for listening into this frequently asked questions. Our phone number is listed on the slide, and so is our website. Strongly encourage you to pick up a phone and give us a call. We would be more than happy to answer any questions that we have missed in this presentation. We do understand that one size does not fit all. There are some personalized questions. That is why we are here for you to answer those questions. Have a prosperous day.